Hey, welcome everybody. My name is Justin Letheby, the professor of real estate. I have with me we were just on this earlier, a longtime friend, Steve Saunders. We've known about 12 years now. And the reason I brought Steve on here today is I brought him here because, well, I've known him as the financial smarts guy that I've known to and referenced for years. He talks about finances and looks at them from a real estate perspective, from unique formats and unique perspectives. You've been a trader at one point in time, right?
Yeah, at the mercantile. Yep.
Yeah. And been a real estate broker, as far as I know, for a long time, investor. And now, I guess what we'll call it for right now, a cryptocurrency enthusiast, although I think I'd give you a higher value than that, but let's just say that for now.
Okay. I like it.
So that's what we're bringing here today. And the reason we want to have this conversation today is really, really simple. We want to have this conversation because we're both under the opinion that cryptocurrency is going to affect our market. It's going to be part of our market. We have to learn how to work with. We have to understand it. We have to learn how to work with it. And we have to learn how to be able to communicate this to our consumers, because if we're going to get an offer based on cryptocurrency or an offer based earnest money on that stuff, which is where I think it'll come in first, we will see that stuff. So what did I miss, Steve? That was a long essay, but I'm sure I missed something.
No, you're good. You're good.
Okay.
We're good.
That works. Okay. So first, Steve, as I told you earlier, I'm just going to start you off with the really, really tough question. What in the world is cryptocurrency?
I have no idea. No, so basically cryptocurrency is like what Elon Musk and Saturday Night Live, that was hilarious with Dogecoin. Anyway, cryptocurrency is just a currency that's not government produced. It's digital currency, and it's obviously getting more mainstream all the time. So when it came out during the crash in 09, 08, when it was worked on, it wasn't anything, right? And if you got in early, you may have lost it all in some of these exchanges that were manipulated, and they took everybody's Bitcoin. But now it's a big, big thing, and the big banks are getting into it. So it's got traction now that it didn't have even 2 years ago.
Yeah, this has essentially exploded basically since a pandemic, really, as you were kind of stating. Some of the stuff happened with the recession, and you're seeing the next real foothold happen now since pandemic. People are, we had time, so to speak, and we could research this a little bit more. And we now have more people that, quote unquote, kind of know what cryptocurrency is. Although I would still argue that I would say less than 2% of the world actually knows what cryptocurrency truly is.
Right.
But so you just mentioned something in there that I do think we want to talk about fairly early in the conversation. So cryptocurrency, in short, it's currency, right? It's just really, as far as it goes right now, it's an unregulated currency. Right? That would be safe to say?
I would say if it's truly blockchain based, yeah, it's decentralized, right?
That would be okay. So that's the better term, decentralized.
Decentralized and trustless, right? So you don't have to trust me. We just do the trade and it's done.
Right. And so it'd be, if I wanted to, it'd be, okay, you trade your car for my car and we call that done type of scenario. Except we're doing it digitally now. Yeah. And that's kind of how we want to look at this. So, but one of the things you had just mentioned was banks are starting to awaken to this, right? They're starting to deal with it. I don't like that word because I think that gives them a little extra credit than what they deserve right now. But they are actually valuing it. They are actually working with it to some degree. What effect is that going to have on cryptocurrency? Like valuing it, like, because one of those, let me ask you this, and this is not a conspiracy theory. This is not any of this conversation. So the reason I ask that question is one of the things that I'm reading right now and listening to quite a bit is, quote unquote, the inflation of cryptocurrency or the deflation of cryptocurrency once we start getting banks because banks are governmentally sponsored, essentially, when we get the government involved in what cryptocurrency is.
Right.
So do you agree with that sentiment, or you disagree with that, or is that a yet to be seen type of scenario?
I think it's yet to be seen. I mean, I'm a contrarian, so if everybody says something's going to happen, typically the opposite happens, but not initially. I mean, right? I think that a lot of banks are looking at it because they have to survive, right? And initially they can take cryptocurrency, you keep it on their books, they can keep it safe for customers, especially big customers like home offices, right? The big investment houses are letting home offices now use them as custodials for the cryptos, so it's less risky for them versus wallets and stuff, which is huge, right? It's kind of like the fancy cars get some kind of safety feature, but in 2 years it's in all the Hondas, right? It just takes time for adoption, and it's really expensive up front,
right?
And then in 2 years it's in mainstream, and people just know about it. They just did a survey a few months back about an average Americans are not into cryptos like other countries are, especially the Asians. A year ago, the certified financial planners wouldn't even talk about cryptos, right? They were basically told by their companies to stay away. It's too risky. It's very risky, right? Of course. But now, like 20% this year are going to start getting into it, and it'll be interesting to see what they do with it, right? I don't know if it's going to make the market make them more expensive or less expensive. I don't know the answer to that. I just know it's going to make more people involved.
Well, and one of the things it always says, right, and you kind of nailed this early on, where all the costs are at the beginning, but that's where all the gains are too, because that's where all the risks sit, right? People can go broke as fast as they become millionaires by jumping on the early bandwagon.
Right. It's extremely volatile. So if someone wants to get into cryptocurrencies and they put in money that they cannot afford to lose, they should not be in there, because it moves. The stock market moved today 2%, right? And is it considered a big, huge move? Cryptos go down 40% in a day. I mean, it's a totally different level.
Well, and that's just it, right? I mean, holy cow, when you look at the price changes or the valuations, I guess, for lack of better terms, of cryptocurrency, I mean, it's a roller coaster ride, quite literally. Mm-hmm. If you don't have the stomach for it, or as you said, the finances for it, this is not a venture for you.
No.
Which is always funny, because I listen to a lot of entrepreneurs, we'll just say. Real estate is among the biggest category, but we'll listen to entrepreneurs, and they always say, well, I should have jumped on Bitcoin 2 years ago. My son did, and now he's got $10,000. And I don't know what he's got. I'm making that number up completely.
Yeah.
And I'm sitting there going, that's great, but what is it today? Because he could have his $200, which is what he started with. It could be just that fast. But those are the people that win. The ones that take those risks early on are going to win the bigger pot, typically.
If they have rules.
If they have rules.
If they have rules. If they just jump in, let's say a year ago during COVID, right? Bitcoin went to 4,000-ish, right?
Right.
And you could have bought it very easily because everybody's selling it. If you didn't have rules, would you have sold it at 60? I don't know. Would you have sold it at 20? I don't know. It depends on the rules you have. So if you jump into this market, since it is so volatile, you have to have rules right when you go in.
Yep.
Day one. So so you can take the motion off the table. You buy it at X. When it gets here, I sell it, or a piece of it, or whatever. Just some rules, anything.
So, here's the thing that I think is interesting, because you're talking rules, and me and you have had these conversations about stocks and stuff like this all the time. Mm-hmm. So when you're talking rules, you're treating this currently as well, we all should think about it this way, I probably would think, as an investment strategy, more like you would treat stocks and bonds and gold and silver, correct? That's how you're looking at it today.
Correct. Just one more piece of a portfolio.
Just one more piece of a portfolio. So let me ask you this. So just changing this conversation.
The answer is no.
Is exactly right. Right. So what I always wonder is this, right? For me, the risk is, I'm going to call it the McDonald's kids meal scenario.
Okay.
Right. So the reason I call it the McDonald's kids meal scenario is, I had a buddy of mine when I was working at a manufacturing plant that every lunch hour, at least once a week anyways, he would go to McDonald's and he would buy the kids meal, because he would get the collectible, right? Okay. The little kid's toy, right? But he didn't want it so he can give it to his nieces, his kids, whatever. He wanted to keep it so he could have these collectibles and gain money for it. He was treating this as a portfolio.
Yeah, exactly.
Well, the problem is, the last couple of years, that portfolio for your McDonald's kids meals isn't anywhere. You go to eBay, you go all the way out, those things just don't sell.
Okay.
Is there a risk with cryptocurrency having that same problem? Treating this part of your portfolio, does that risk exist where you could essentially be sitting on a $10 million coin and tomorrow be sitting on a $5 coin?
Sure.
Do you see that kind of, and realistically, do you see this actually coming down the road and no one ever valuing it? Do you see that ever being a risk?
No.
Okay.
I think it's always going to have some value. Now, there's some swings, right? It's not a
Sure.
mature market. So it's nothing to go down 90%. Now, if the stock market went down 90% one day, people would be jumping out of buildings, right?
Right.
And cryptos, we're used to it. It's like, whatever. But it never goes to zero. So I don't see the scenario when it goes from 10 million to $5. I don't see that happening. Could it go to 10 million to 1 million? Oh yeah. Absolutely. But it depends on the adoption, the team that's involved with that cryptocurrency or that token, right? Where we are in the cycle, we're still super early on cryptos. I mean, really early. It's people say, well, I wish I'd bought Bitcoin at $50 or $100. Well, you could have bought Bitcoin at 10 cents. I mean, come on, guys. But there's a lot of stuff out there right now that's coming out at a fraction of a cent. That could be the next Bitcoin. So you put a little bit of money in. If you lose the $300 you put in, or I'm not suggesting anybody do anything that they shouldn't, but that $300 could easily be $30,000, very easily. But if you have rules, you're not going to see the scenario you had. If it goes to 10 million, you're selling all the way up. As it breaks, you're already off the table. There's no more risk for you, right?
Going back to the rules, right? Always make sure you.
Yeah, you're not going to have stops in there like a stock market because you don't have a market quite like that yet. But you're getting there. I mean, it's the fact that Fidelity got into it years ago. It tells you a lot. Fidelity's not stupid. Now, you're not going to see like a Vanguard go into it because it's a very stable company and old school. Fidelity's not. It's much more aggressive, and they have a whole team. So this stuff is, Fidelity's not stupid.
No. Yeah, they've lasted a long time.
Time. Morgan Stanley's not stupid, and Goldman Sachs. Those guys know that their client base, including Fidelity, right? They are asking you about cryptocurrencies, so they better be experts. So when that billionaire says, I want to put 0.01% of my portfolio in Bitcoin, for example, right? They know how to do it. Right?
Yeah.
Because that client may want it and they don't know how to do it, right? It's hard.
Yeah, that's interesting. So besides working the investment angle with cryptocurrency, buying in early and selling high, buying low, selling high, right? Is there any other way, or do we want to go down that rabbit hole? I guess I'll let you answer that question. Is there any other way to make cryptocurrency?
To make money on it or to make it?
Well, that's a good question. Maybe I'm asking the question wrong. So essentially what I'm asking you is right now I can buy crypto from you. I'm going to say, Steve, can I get $5 from you or whatever? And I'll pay you cash and you could sell it to me, or I can go on the interwebs and buy it from different places.
Yeah.
But is there any other way to make Bitcoin, right? To generate income without having to buy from a secondary source? Such as, so I'll just break it straight down to you. Are most people using how Bitcoin got started, where it was literally mining data?
Yes.
Okay.
So so the miners are the ones that produce the coin, right?
Right.
And they also are that do the transactions for you too, so they get paid for that as well, right? That's how they make their money, and they take the risk, right? But the only way you can make Bitcoin is to mine it. That's it.
So is all the other cryptocurrencies doing the same thing, or are they all using different methods now for valuation? Is it all in stocks essentially, like valuation based on selling and buying? You might even ask the right question. I guess I'm not even
you're fine.
asking the right
you're
question.
fine. There's different ways to have a coin. There's mining, or there's just you have so much of a certain coin that was made, so there's no using electricity type of thing, and proof of work versus proof of stake, right? So it depends on, and that's a conversation you probably don't want to get into here, and it's stuff that I really don't get into myself, to be honest with you. But some of these coins are garbage, right?
Right. That's kind of the question I'm trying to get to.
I figured that, yeah. So you got thousands and thousands of these things. People think there's, Bitcoin and 10 other ones. There's not. So I encourage people only to look at the top 50 based on market cap, because those are the ones who really have good teams, smart people. You can read the white paper on them. They're not just somebody that's starting something in his garage, which you can do, by the way. You want to have something that's got value, right? And more value in the future. So Bitcoin being the gold standard, right? That's the one that started this whole thing. But there's Ethereum and there's, Dogecoin that people are talking about now with the little dog and stuff. But I wouldn't touch anything less than the top 50, because it's kind of like the turn of the century. There was thousands. I think I heard 6,000 car manufacturers in the United States, right? Now there's less than 10.
Right.
Right. So you want to stick with the ones that you think are going to last. You don't want to just take a chance on the guy down the street that's doing his own coin, which they can do very easily, very cheaply now.
Well, and see, I guess that's exactly the long-winded way of getting to where I was trying to go with that question was really simple. How do we value, right? Because if we're going to learn to buy, the only time it makes sense to buy is if we want to use it to some regards to sell, right? I mean, otherwise it's just virtual value, right? It's not a real value, like a net worth, right? We're worth so much, but that's great until we cash it in. It's not worth anything besides the words written behind my name.
True. Value is the key in anything, right? If someone doesn't give you value, you shouldn't buy it, no matter what it is, right? The beauty of cryptos now that weren't here a couple of years ago is DeFi. Decentralized finance, unbanking. So now there's a lot of cryptocurrencies, Justin, that you can buy and you can give to these DeFi companies and they pay you interest. So I use a company called Celsius. So I'm going back to your worth question, right? Yeah. So if you buy like a US dollar coin, which is pegged to the US dollar, very stable, it's called a stable coin. It's very stable. It's basically one. Okay. Sometimes a little bit more than one, sometimes a little bit less, but micro movements. Okay. If you give Celsius your US dollar coin, okay, they pay you right now, and it changes, is 13.5% interest.
Oh wow.
Every Monday morning. I mean, it's over a year, right? It's APR, but still 13.5% interest when the banks are paying, a fraction of a percent of interest, right?
Yeah, I'd put my CD money there.
Yeah. So is there risk? Yes, there's no FDIC. Okay, so you have to pick a company that's got value, and some of these companies do have insurance now, including Celsius. They're getting more and more insurance, so there's less risk, but it's not FDIC. So if you really can't afford to lose this money, you shouldn't take any risk. But I know people that have done all the research on it. They put in money into, for example, Celsius. As a disclaimer, I don't work for Celsius, but I really like the company. And they're getting 13% interest. Justin, that's value.
No, that's value. Absolutely. Yeah. No, absolutely.
Yeah. And they also, the thing that's really cool about DeFi, which once we get into especially talking about real estate and cryptocurrencies, right, which is, I think, going to be coming down the pike, you can borrow against it now. So these DeFi companies, like if you had your money at let's say it's Fidelity, right? You have a stock portfolio of $500,000. They'll let you borrow against that $500,000 portfolio, a percentage of it, right? To do something else with it, right? People don't usually take advantage of it, but people that, the really, really, really rich people do. They always borrow money before they use their own. Well, absolutely. The same thing with DeFi now. So let's say you had 5 Bitcoin and put it into these companies and they pay you 10% interest or whatever they're paying right today, right? Changes. And you needed some money. Instead of selling your Bitcoin, Justin, you can borrow against your Bitcoin. They're paying you interest, but you're borrowing your own money off your own Bitcoin instead of selling it. So you still own it. And yes, you pay them interest for that privilege, right? But it's instant. I could do it on my phone in 30 seconds. So if I needed $100,000 to do work on my house and I own 5 Bitcoin, right? Okay. I could borrow $100,000 against the 5 Bitcoin that I have at Celsius, pay them interest, right? I could do that transaction with no paperwork within a matter of seconds. I mean, how about that? If I went to a traditional bank, there is no way that I could get that kind of money. And even if I had the cash, it would be paperwork city. I'd have to pay all kinds of fees in addition to the interest, right?
Yeah, 45 days minimum right now.
Not with DeFi. DeFi is going to change everything.
That is interesting. I didn't even know that. I mean, we've talked a lot lately about that stuff, and that's fascinating. And that is almost a perfect segue into what we need to start talking about,
yes,
which is
real estate.
Is I find that fascinating because, when we sat there, me and you sat there through the last recession and through the great real estate fiasco of the world, right?
Yes. Oh, God. Makes me want to drink.
Exactly, right? And not the stuff that we're drinking right now, where a lot of standards, a lot of rules got put in place because of things that people were doing wrong, right?
Yeah.
And that put a huge consequence on the mortgage world. The biggest being that typically, it's 45 days to get that loan.
Right.
So that now, again, I don't know if you can get I don't know. You'd know that better than I. I don't know if you, in theory, could get a $250,000 loan off your crypto, but that would be very, very interesting because that would definitely expedite the process, which is really where the thing would sell today, right? I mean, we're already dealing with a crazy market as it is, but that would put a lot more buyers on the market for sure.
Justin, millions you could take. It's just a percentage of how much you own. So, Justin, yeah.
So it just depends how much you have, so much you can take.
Right.
That's interesting.
It changes every day. It's on your phone, how much you can borrow. Then the term, right over the term, it's either short term or medium term or long term. You can just borrow against it. So this is a perfect segue to that link that I sent you about Proppy.
Right.
So Proppy, who's NAR put a lot of money into Proppy a few years ago, I think 20. And so that brought, I mean, I've been watching Proppy for a long time. It's a real estate, obviously cryptocurrency company out of the Bay Area. And that kind of put it on the radar because it was really, really highly valued. And then cryptos all got killed and it went down with everything else. And all of a sudden NAR put a few $1 million in and it caught my interest. And they just did the first real estate NFT here about a month ago. And that email that I sent you, that link, the most interesting part about them doing that NFT was the seller said he wants to do DeFi against it. He's trying to create a market. He's a cryptocurrency expert. He's trying to create a market for DeFi on real estate. And he thought the best way to do that was with an NFT because NFTs are digital assets, right?
Yeah.
Put on the blockchain, and they're actual. I mean, that's almost like a right to use it, but once you own the corporation, I mean, it's really cool how he did it with the corporation. But the main thing about that is the DeFi part of it, not the real estate selling and the cryptocurrency buying it and all that stuff, which is a piece of cake to do. He wants to create the DeFi market for real estate, so you can do exactly what you just said. You own a piece of real estate. You own 123 Main Street, right? You say you want to use that as leverage to a DeFi company, not a bank. Okay. They take it as an asset. They see it on the blockchain. They see you, Justin, are the owner, right? And they lend against it, especially if you had cryptos, right? They lend against it. That would take the bank out of the equation.
That's fascinating. Man, we could go down the rabbit hole on that one for a long way. But
we could.
So could you, in theory, could you interest out profit on living on your own property?
I like.
Could you make money on your own property essentially through interest?
I haven't thought about that. Man,
would that be an interesting concept? I mean, you're quite literally living on your own savings account.
Right. I don't know. I mean, I do know, like these people that the super rich in this country, they never use their own money.
Right.
They never do. These home office people, they don't have to. They borrow money and their assets are collateral, right? Whatever those assets are. And typically it's an investment house that has those assets as collateral, right? Which is fine. But now it seems to these DeFi companies are starting to want those assets into, now they're blockchain based versus before they were not, right?
Right.
I think it's going to open up a whole new world, and maybe they can borrow money for much less money, right?
Man.
I don't know.
We've talked a lot about this lately, and that didn't even occur to me what you're talking about right now. And that mail is out there. I will put that link in the notes, folks, if you guys are watching around. And also, by the way, folks, even though it doesn't sound that way, we're not talking at the 10,000 or at the 10-foot level. We're talking at the 20,000, 50,000 foot level. So when you're hearing terms like blockchain, if you want to know more about them, I recommend you research that, because that's a rabbit hole that I know we probably could both go down, but I don't want to lose us in the weeds.
Right.
Just understand that blockchain is a technology that's been around for a lot longer than even cryptocurrency has been, but is designed to secure, for lack of better terms. So you make that point, right? So we can utilize cryptocurrency to leverage to buy our product, either through buying the home, through getting a loan, or even NFTs, which again, we're not going to go all the way down that rabbit hole.
It's a tough one. Yeah.
But is another interesting concept. By the way, NFTs is why I was asking if you could essentially make interest in your own property, because that's an interesting loophole that I think could exist that way. So let me ask you, though, as a realtor that just listened to us talk for almost 30 minutes already, and it feels like 5.
Right.
How do I explain this to my seller when they're getting an offer and they want to put 2,000 Bitcoins as the earnest money?
That'd be a heck of a property.
Right?
That'd be $6 million. Wow.
Okay, so let's say 2 Bitcoins.
How about 2? Yeah, there we go. So they want to put down 2 Bitcoin as a down payment, or as a earnest money.
Right. Which would essentially right now be what, about $3,000, almost $4,000, somewhere around there.
2 Bitcoin? No, it'd be 60,000.
Is it 60,000?
Yeah.
Okay, I haven't kept track. I'm doing.
No, you're fine. You're fine. It's $30,000 a Bitcoin now. It depends who's on the other side of the equation, right, Justin?
Right.
If that seller is receptive to taking cryptocurrencies, right? It could be other ones besides Bitcoin, but let's use Bitcoin, 2 Bitcoin, right? If I was the seller, I'd take it in a heartbeat. I just put it into a wallet, or I put it into a Coinbase account or something. But it would have to be the attorney that would do that, right? It couldn't be me as a seller if it was if somebody's trying to buy it. But you could easily, if depending on the attorney involved and all that kind of thing, it's probably at this point, because it's still early, you would probably take it, let's say you had it at Coinbase, right, which a lot of people use. You just take it from Coinbase, put it into US dollar, and shoot it over to the title company or the attorney's escrow account, that type of thing. Okay.
So you would actually, I never thought about this either. So the title companies, you actually have to work with a title company that actually has a digital wallet of some sort.
You could. I mean, they could have a Coinbase account. I've never seen one that does.
Right. I was going to say, but you got to have some way of accepting that transfer.
Yeah. It depends on the other side. Getting rid of it or sending it to somebody is no big deal, but who's on the other side of the transaction? There's this attorney in California that I get some ads from that, says I can make sure it happens, there's Bitcoin in a transaction, right? That is a piece of cake. But he probably has escrow accounts that are set up, right? Which is probably what most attorneys don't have. But I think that may be his value add. I don't know. I've never talked to him. But it's not going to be that hard. No,
I get it. Here's the thing. Not hard, but it is hard, right? Because as we just said earlier, no one's willing to, the people that win are the ones willing to take this risk. And the reason they win is so very few are willing to take this risk.
Right.
Right. So if you wanted to right now have the Steve Saunders title company and be on a digital platform, you would probably win because you would be one of probably a dozen in the country that would do it.
Right.
I mean, I'm making that up. I don't know if it be a fact, but I can't think of a title company I can think of right off the bat that has even had that conversation out loud with me.
I've never heard one either. They're so stoic, right? I mean, they're a title company. They got to be really careful. I think the thing about Bitcoin with regard to property is this: we are used to valuing everything in dollars.
Right. Well, as I proved it, right? 2,000 Bitcoin. I already screwed that up right off the
You're
bat.
good. No, you're good. You're just in the Bay Area where the house is $50 million. So the thing is we always equate it to dollars, and that's the biggest problem when you first start trading cryptos. Is everything, what is it in dollars? You should never even look at it in dollars when you're looking at the cryptos. What is the value of it in Bitcoin? Now, there could be a lot of zeros in front of it, right? Because Bitcoins are very expensive and the other ones are very cheap. But that's really the way. How do things move with regard to the leader, Bitcoin? The problem with a piece of real estate is if I was going to buy your house and you say I want to sell my house for 35 Bitcoin, right? Then it's a piece of cake. I'll give you 2 in escrow. In earnest money. I'll give you 2 in earnest money, and we're still dealing with the other 30. Bitcoin. We don't care about dollars, but most sellers want dollars. So you convert the Bitcoin to dollars, and the title companies have no problem with that, right? And then it's in, it's kept in their escrow account for the seller, or goes back to the buyer if there's a problem, But it's all in dollars because that's how they sell the houses, based on what is the price of this house. Well, it's $1 million. If people start going and say, I want 30 Bitcoin for my house, that's when we have a very, very cool transaction, right? It's a Bitcoin transaction, not a dollar Bitcoin transaction.
And that's very interesting, right? Because I the way I never looked at this, and that actually kind of just awakened me a little bit to this, is one thing that I find very interesting is I was always converting it, right? You look at Bitcoin, right? And I see it, and I see those little numbers, like, okay, so that's $2,000. Okay, so obviously, as I was looking at it was wrong. You just awakened me to that. That's huge. So it's almost like we need to have, when we go overseas, we need to have these converter systems to sit there and say, this is equal to this is equal to this, right? You're using Doge, that is 1 Bitcoin equals 200 Doge, which equals $50,000, or whatever that conversion rate is going on in the world right now.
Once people start to do that, Justin, it changes everything. Everything.
Well, it definitely goes global, which is a major conversation in the cryptocurrency world right now.
Right. So if you are in El Salvador, for example, where they're trying to make Bitcoin the legal tender, right, which is interesting.
Oh man, that'd be wild.
It's wild. So it may not happen, but it could happen, or some form of it could happen, right? You won't look at anything, and they use the US dollar before. They won't look at anything in US dollars. It'd be, how many Bitcoin is that? And you'll have 5 zeros or 6 zeros in front of a 1 or whatever. Once people start to look at that, it's going to be so much easier for them to figure out what the stuff is valued at. Back to your value.
Mm-hmm.
It's all based on value. What is this in regard to Bitcoin, not dollars? So when in my cryptocurrency club at Clemson University, we look at cryptocurrencies against the US dollar, because 90% of the US does that, right? And then you look at it compared to Bitcoin. It's a totally different conversation. They don't move the same. Right. They don't move the same at all. It's crazy.
No, it becomes very interesting.
Yeah.
Getting back to the real estate side of this. So we talked about the earnest money. You got to have a wallet or
somebody that holds it for you,
or some sort of holding solution, right? Mm-hmm. Of some sort. How does that look? How to ask this question right without going off a different, I don't want to go too deep down that rabbit hole, but so you made the offer, you purchased this, they now hold it, the title company transfers it over because we have the right holding bases.
Mm-hmm.
Are we done now? Or what else would that look like from a transaction? Or is it just on the next one? Again, let's not go the NFT route because I think that's a different conversation.
It's a really complicated way to do it, I think. I think you're fine. I mean, once you transfer to dollars, it's done. The buyer had Bitcoin. He changed or she changed the Bitcoin into dollars, right? The seller accepts the dollars. It's like they took it out of anything else. They sold gold to buy dollars or whatever.
So
right?
Who is doing that right now?
It depends where they have their Bitcoin. I would say Cash App,
okay,
Coinbase, Kraken. I mean, there's a zillion places to do it. It depends where you're holding your Bitcoin, right? So that's the key, or Fidelity. The thing that's really changing right now behind the scenes, okay, is this is getting much more of a commodity versus just a fluke out there, something crazy people do or nerds do, right? So you got the Chicago Mercantile Exchange that now has options and futures on Bitcoin, right? And they don't get into anything early. Trust me, having been a trader there,
yeah.
They are really, really, really careful, and they just do stuff that's going to make them money, right? But they need to provide liquidity to a market that's typically not liquid, and that's the futures and options of Bitcoin. It's gonna take off. I mean, the CME doesn't do stupid stuff. They don't.
No. And you're right. They through my experience, they're one of the slowest for picking up on anything, right? If you're looking for them to be the trend maker, they're not going to. They are the ones I typically explain like this. They may not be the trend makers, but they are going to be the trend provers when it's all said and done.
Right. So there's just along that note, because I think this is really important for people to know. When you make a trade at the CME, which stands for the Chicago Mercantile Exchange, the other side of your trade is them. So if you buy something, they're selling it. If you sell something, they are buying it. So that trade is good. There's no risk because they are the other side of the trade. It's not you and I trading. It's
right. Well, I don't know if it's actually going to go through or not.
Yeah. Or you lose all your money and now the trade has no value. The Mercantile Exchange guarantees your trade when you make a trade. Is it expensive? Absolutely, it's expensive to trade with them. And there's really strict limits with regard to margin and all kinds of things. The fact that they're involved now stabilizes the market tremendously, because you've had these other exchanges where you can trade and you can do huge margins where you borrow $1 and they give you $99, but they blow you out instantly if the market goes, let's say you're long, the market goes down, you're out of the market, right? You just don't. And so the market's very volatile. Very volatile. Those things are going to be gone in 5 years, I think. And the market's going to stabilize like the stock market, where it moves 1 or 2%. You're not going to see a move where it goes 30% in a day. It's not going to happen. There's going to be circuit breakers. There's going to be all kinds of stuff that you have in the stock market. It's like the stock market was 100 years ago.
Right.
So if you really want to take some risk, maybe make money, maybe not, now is the time to do it. If you don't want to take risk, this is not the time to be in this market. Because you won't sleep at night.
Yeah, no. This would be your Christmas money or whatever you want to try, right? Whatever you got from that, something that's not going to, or your savings account that sat there, like mine, that sat there for 2 years, and I got to do something with.
I got the same thing, right? The thing that's really interesting, if you do some basic math on the rules, the ones that I use, if you take less than 2% of your net worth, okay, and use one of our more aggressive rules, it will double your net worth. Now, you need a lot of movement, you need a lot of volatility, you need a lot of sleepless nights, but if you lose it all, you've lost 2% of your net worth.
Right.
If the rules work, I have that caveat, right? And they have in the past, it may not happen in the future, right? They will double your net worth. That's pretty incredible.
Yeah, no, that's really good.
Yeah,
that is really good.
But it's risky. I mean, it's really, really risky. This is not for the weak of heart.
No, but it is something that we as real estate, which again is an industry that, as far as I am concerned, is traditionally very slow at adoption, needs to be aware of, right? Because you're gonna, if it hasn't happened already, you're gonna get someone that's gonna make this offer saying, okay, I want to put 200 Dogecoins, 2 Bitcoins, whatever the number is. I want to put that down as my deposit down or my earnest money or whatever, right? And they're going to show their Bitcoin as collateral to say that they're good for it.
Bingo.
And if, for me, I'd have to learn. I'd probably be calling Steve Saunders up going, okay, how do I explain all this? But I at least know that I'm confident enough to go, okay, that's a lot. There's some value there. Now the risk is going to be on the seller saying they're willing to go that conversation route. That's a different conversation, but I can do that. But I don't know if a lot of our realtors could have that conversation. And that's what worries me, hence why we're having this conversation today. So at least you can understand some of the basis of this and understand what's going on. Now, with that, we're at 40 minutes, and I told you 40, 45. So we're getting close to the time frame. Let me ask you this. We said we got a dependence on value. You said find the top 50. We talked about a couple of products. Now I'm going to have you tell us a couple of places to find some information.
Sure.
But before you do this, I want to put the little caveat that we all realtors always throw out in there. Please understand, when me and Steve are talking these things, we are not licensed experts. We're not suggesting, telling you. We're not doing any of those things. We're trying to inform, and that's all we're trying to do.
Not violating the code of ethics here. We're just having a conversation.
Just having a conversation.
Right.
So with that being said, how do I know the top 50? Where would I go to find that information out? Where are resources, me as a realtor, not as a financial advisor, but me as a realtor can go to at least understand some of this and at least know those top 50 that you're talking about?
Okay. There's two websites that are really, really good that tell you the basics, and it's top 50 based on market cap. Like in a stock too, there's top 50 stocks based on market cap, same thing. Coin Market Cap is the big one, and Coin Checkup is the one I like. So it gives you ratings, and you can see the ratings, and you want to obviously stay with programs that have good ratings, not bad ones. And they do a lot of the research for you. It's free. These are free sites. You also, Coinbase, obviously a company that just went public here recently out of San Francisco, very good company. They only trade like the top coins. So if you happen to be a Coinbase customer, you only can trade the good stuff. They don't really trade anything I can't say risky, but they don't usually trade stuff that doesn't have value. Not to say you make money. I'm just saying they vet it pretty closely.
Well, they're going to have to, right? Because that's kind of their job.
Have to. Yeah, they're publicly traded companies, so they got to be really careful. The thing about it is, anybody that's wanting to get in crypto should definitely. It's painful initially. It's much less painful than when I got into it 6 years ago. But you should probably open an account and see how painful that is, and get a wallet and see really how painful things are. And go down there and just put a little bit of money in. I'm only putting what you can afford to lose. Put in a little money. This is what I had my kids do. Let's put some money. Let's take $500. You pick out the coins based on the white papers, and we'll buy 5 coins. So you build a little portfolio of coins, right, or tokens, and you can buy fractions of this stuff, guys. So you don't have to buy one Bitcoin to have Bitcoin. You can buy a millionth of it. But
yeah, right now Coinbase, I'm looking at the website, it just says get a $5 worth of Bitcoin. I'm going, okay, that's what 0.002%.
It's not very much. Yeah. But last year it was much more, right? When the Bitcoin was 90% lower. So if anybody really wants to get involved in this, they should trade. They should get in there with a little wallet, put in some money, see how it works, see how painful it is. And you got to learn, right? It's tuition. And then when their client says, I have 50 Bitcoin, I bought at $2 a piece, and now it's 50 times 30,000. I can help you use that Bitcoin and do a transaction. That's the conversation you want to be up to speed on. That's it. Because a lot of people out there bought this stuff at 10 cents.
Oh, there's a lot of people that have a lot of money in it, absolutely, right now.
Yeah.
And the ones that are mining have even more. So
right. And if you can help those people, even with a basic understanding of it, you're going to be so far ahead of most realtors. This is the conversation. You don't have to be an expert. You just have to know what's going on. And if you do this stuff in yourself, you're going to have the conversation. You're going to be intelligent about it.
Yeah. No, and I want to definitely echo that. Again, we're not trying to teach you how to make offers on that. If you want to make offers on properties on Bitcoin or cryptocurrency, that's your world. And that means you're definitely going to have to learn it. But really what we're trying to do today is being able to give you that conversational level to able to sit there and say, oh, you got that? Let's talk options. Here are some of the options you have. Here are some of the abilities you have as a consumer, as a buyer, to do this.
Right.
So I think that is huge.
Especially if they have, let's say they bought it cheap, Justin. Okay. And then you tell them that they can go to a company like Celsius on DeFi and they can not sell their 50 Bitcoin. They can borrow against it really inexpensively for a short period of time, a couple of years, 3 years, whatever, and pay a small percentage back and not sell their cryptos. Think about that.
No, that's huge.
It's huge.
That's definitely, you've got me more research that I have time for right now, because that's definitely something I want to go and come back and look at, because something that didn't cross my mind until we were talking about it today. That's
right.
Yeah, that's huge.
Banks should be worried.
Oh, absolutely.
Banks, traditional bank, I don't see much. They don't have much of a lifespan, much anymore.
Well, could you imagine if this was at the level it is now in 2007, 2008, 2009?
We would not have had, it would not have been as violent as it was.
It would have changed everything. Well, it wouldn't have been as violent as it was, but there would have been a lot of banks out of business.
Yeah,
you wouldn't have other banks buying them up, and they wouldn't have needed to.
No, I mean, why?
Right.
You don't need a brick and mortar to do. I can do everything on my phone.
Well, I mean, we're seeing it, right?
Yeah.
We're seeing it in almost every industry. There were certain industries that picked it up first, right? I will actually give real estate credit for this, because I think you saw a lot of real estate offices, brokerages challenging the brick and mortar model even before 2007, 2008, proving it during the recession. And then now most companies are starting to realize this, right? The past pandemic has proven to most people that physical structures are nice and maybe wanted, but are not a necessity. And that includes the banking industry. And especially if we go with digital currency, which is a global currency at that point in time. If it's digital, there is no conversion. The only conversion will be between the different cryptos.
Yeah, I mean, the U.S. dollar will not be what you compare anything against.
Well, I tell you what, that again, we're not going down that conversation right now, but the value of the dollar is another conversation that should be had at some point in time versus crypto, because I do think that's an interesting conversation to be had.
Well, you kind of touched on that with regard to your inflation question, and I'm certainly no expert on inflation, right? But I'm a strong believer that you should have some crypto, in your portfolio, just in case it takes off. And you could be saying a conversation you and I are having, and Bitcoin's at $5 million. And remember the time that we talked on a podcast and it was at 30,000? I don't know what's going to happen, but I don't want to not have that in my portfolio to see.
Well, but also I think it's interesting, because I think you've hinted at it a couple of times. You want to be diversified in your portfolio. That's one.
Right.
And not so much that you want to be diversified so you can say I have all this money, but
no,
it is
not at
to
all.
future-proof yourself, right? It is to balance when that inflation does come harder than we want it or are able to let it come, right? You have other abilities and other tools to withstand the deflation of a dollar, so to speak.
That's why if people start to look at things valued in Bitcoin as opposed to dollars, it's so much better.
Yeah.
Not that it's stable, but it will be someday.
That's fascinating. Yeah, there's a lot of different conversations. We went down a couple different conversations, but that got me. You got me thinking on that a little bit more, which is what typically happens on this. Okay, with that being said, I want to give you time. Is there anything in here that we missed that you think, from a real estate perspective or an entrepreneur perspective, simple business owner, that we did not talk about that you say, oh, what, Justin, we got to have that conversation?
I think the thing that we need to talk about is in the news, Justin. They usually, they talk about like ransomware and the people that, that shut these companies down and took over their computers want 50 Bitcoin or whatever it is, right? It's usually fairly nominal, by the way, compared to what they could ask for. But the bad guys in the news, they always say, well, this is the reason we shouldn't adopt Bitcoin or use it more, right? Because the bad guys use it, or the dark web. The thing that people don't realize about blockchain is you, Justin, can see everything I've ever done on the blockchain, everything. Mm-hmm. You just have to know my address, right? Which is very easy to get, by the way, for the most part. So the bad guys are not using Bitcoin because you can, if you're the FBI or the NSA or whoever it is, right? The government agency, you can see what the bad guys are doing. You really can.
Yeah.
Yeah. So if you really want to do it, they keep saying it's, for the dark web and it's for nefarious things and all this stuff. It's not the case. You use dollars for that. You can't trace a dollar.
No.
Right? You give a suitcase of dollars and it's gone, right? It's gone. Bitcoin's not gone. It's on the blockchain. It can be seen by everybody that knows how to see it. So that's what the general public thinks. It's only for bad things. In fact, it's just the opposite.
No, well, and again, digital is digital. Digital leaves a trace, quite literally.
Right.
I don't care what tool you're using; it leaves a trace. Now the trick is where blockchain is probably better than many is some of them. How fast can you trace it versus how fast can you get it back? Different conversation.
Yeah, it's a different conversation.
But the more secure tools, the more tools out there, the better off it is. Which, going to what Steve said, the only thing I will also say at all point in time is just remember this is non-regulated, so to speak. It's decentralized.
On purpose, yeah, on purpose.
Which does mean if you get in any real big problems,
you're screwed.
You're on your own.
You're done. Trust me. Don't make that mistake. I've done it.
Well, there was somebody, I was listening to a podcast somewhere where someone had, $50,000 worth of cryptocurrency.
Sure. And
they went to a crypto event and their wallet got hacked and essentially lost it all, which means they essentially lost it all.
Yeah.
And that's where some of that risk comes from. I mean, right. In real estate, the biggest thing we worry about the closing table is wire fraud. So if you're going to do these things and you're going to do this from a real estate perspective, just realize you're going to want to have, as Steve has said many times, from a different perspective, you want to have rules. You want to have strategies and implementation tools out there. Otherwise, the risk is huge.
It's huge. You're pure speculation, and you can't put stops in. I mean, it's too fast. The key is if people want to get up to speed in this because their clients are definitely doing it, they should start a simple Coinbase account or Kraken account, or I'm not telling you what companies to go with, but something simple that's solid, and so you can have that conversation and you're intelligent about it. That's especially if you're new in real estate. That could be your value add.
Oh, absolutely. 100%. Right. You want to work with probably not the well, they probably have more of it than anybody else, but probably I would say the more people willing to take that risk with those type of currencies would be the younger generations. Everything they've done is digital. They're much more comfortable in this world than some of the more mature generations that we have out there. But as you said earlier, most of the people that have this are the ones that already have a windfall of money somewhere else, which is usually the more mature generations. But yeah, so just play.
Well, the older, I mean, the more mature generations are just getting into it, right? Because they've been told for years not to touch it. It's super dangerous. It's only used in the dark web, right? So you got some kid that put his allowance in there.
Or whatever.
Yeah, the grandson put it in. He's got $10 million. It's like, I like him.
Yeah.
So they're saying, well, it's got value. Back to your value add. It does have value, but we're not endorsing any cryptocurrency in this call. But just know it moves, and it moves down 90%. So if you can handle your statement going from 10,000 to under 1,000 over quickly, don't touch this stuff.
Yeah.
Don't even think about doing it. You'll be upset.
Well, it's typically like you hear from all the gambling websites, right? you should be doing this for fun, not for a fortune right now. If that's how you should look at it a lot of times, right? Unless you're going to use rules or take classes or do something to understand this in a much stronger format. I mean, for me, I'm not putting things in there that I can't lose. Like I said, it's the savings account that's been sitting that hasn't been touched in 5 years. Like, okay, well,
it hasn't moved.
It hasn't moved, literally. But I took a buck last year.
Oh, there you go. So yeah, make sure you pay taxes on that.
Right.
The way I got into is I took a class at Clemson University, and that it wasn't a high level. It was just basic stuff. And then I reached out to my friends. I have a very close group of friends, and I knew someone was involved in it. One of my friends was, so I had him come to the house for a week to get me up to speed quickly. And that was it. This is tough stuff. So I needed a mentor, right?
Well, and I think that's huge too, right? I think that's something that I would recommend always with this. If you're going to get in there, even if you're just trying to do it from a help perspective, as we all should do in all parts of our business, but find that mentor, find that group, find that people that you can lean on a little bit to make sure you're doing this in a secure and a session and in a variant that you can feel comfortable with.
Right.
Because I'm not going to go talk to Joe Bob down the road who's just spent the last 5 years building a $10 million empire through crypto,
right?
Because that's not my comfort level.
No. But now you can go to a financial advisor from like Fidelity. They're up to speed. So the fact that Morgan Stanley and Fidelity is first, but Morgan Stanley and Goldman Sachs are allowing at least the really wealthy clients getting involved. Justin, in 2 years, it will be mainstream for the average client at Fidelity that's got $5,000. Swear to God. It just
that's wild to me. It's awesome, but that's wild to me.
It just takes time, right? And you got people making fun of Dogecoin on Saturday Night Live and all that stuff. All that stuff makes it happen. It makes the conversation to the average American, right? Most Americans are not into cryptos at all. In other parts of the world, it is huge. So again, when back to the US dollar conversation, right? If people just put in perspective comparing things against Bitcoin, because it is the gold standard, right? As opposed to US dollar, the US dollar is not used that much in the world compared to other stuff, right? It is certainly, but it's not like it was when I was a kid. So it's time now for people to think differently.
Oh, it's a metric.
It loses value all the time. If we get inflation, obviously that's a huge tax on the dollar. All that stuff makes a huge difference. We got to be careful with that. That's all.
Yeah. Okay, Steve, we are at that point. So is there, that was huge, folks. So, I would recommend, I'm not a big person saying re-listen to these things 500 times, but I would listen to this more than once because there was a lot of nuggets in here that we're not going to grab right off the bat. Thank you, Steve, for being there. Sure. Is there anything normally when I get people on, I give them the opportunity to do a solo shout out, a solo market? Is there anything that you want to talk about, brag about that you're doing that you want people to be aware of?
No, I'm just going to brag about our relationship. So you and I went through some complete, utter crap in the crash. And I just want to say it was awesome working with you back then. And it's awesome working with you now. I lost a lot of colleagues during that time, as you know, that committed suicide and they were heavily involved in real estate, and they did it with, it was so frustrating for me losing these people because they were really smart people, but they couldn't get their head around what would happen on the other side. Right. And that was just so sad for me, but you and I stuck together and we came out the other side, and now we can trade cryptocurrencies. They can't even do that now. It's it's crazy.
Oh, I tell you, Steve, it was a lot of fun. I mean, it didn't feel fun during the time, but now it's a lot of fun.
It was interesting. But I always appreciate your friendship.
No, I appreciate it too. I'm glad you're here, and I'm sure glad you took time because, again, I've always trusted your knowledge, and I think this is such a huge conversation that we're not having. So I really appreciate your time, and for everyone there, thanks for participating, and we will see you next time.
Sounds good. Thanks, guys. See you, Justin.
See ya.